All right, what is up, everyone? Today we're going to be talking about the most exciting topic ever, yet again. Also, one of the most misunderstood areas of personal finance as well, life insurance. Okay, so there are a lot of myths floating around, and these myths can lead people to make poor decisions or avoid getting coverage altogether. So, my goal today with this presentation is to clear up most of the confusion so you can make confident, informed choices that truly protect your family. All right, quick note. Gotta have the disclaimer here. So before we dive in, this presentation is for educational purposes only. I am not giving legal, tax, or specific financial advice here. Insurance laws and products vary by state, and your situation is unique. So please consult a licensed professional before making any decisions. All right, why do myths matter? So, because they shape how we think, right? And they often hold us back from actually taking action when we need to. So when it comes to life insurance, these myths can mean your family ends up underprotected or you end up overpaying for the wrong type of policy. So by clearing up these myths, we can make sure that your coverage fits your needs and your budget. Myth number one, okay, life insurance is expensive. Okay, this is the most common myth. Reality, most people wildly overestimate the cost of life insurance, sometimes by like 3 to 4 times the actual premium. In fact, a healthy 30-year-old can often get a $500,000 term policy for less than the price of a daily coffee, right? So, also, the issue stems from most people trying to get life insurance when they're old and have a lot of health problems. All right, that definitely makes life insurance a lot more expensive. Cost is rarely the real barrier. It's really a lack of understanding. Coverage is often surprisingly affordable, like I said earlier, right? So, especially if you start off young and healthy. Okay? Even policies for people in their 40s and 50s can be reasonable, depending on health and term length. The key is to shop around and lock in rates while you're in good health, right? So you got to make sure you're working with a great broker like myself, okay? Hint, hint, right? Who works with a ton of different carriers to find the best fit for you. So you want to take a look at these numbers, right? For a $500,000 30-year term policy, a healthy non-smoker in their 30s, they might pay around 20 to 30 bucks a month. If cost is your reason for avoiding coverage, it might be time to recheck your assumptions. By the way, these numbers on the screen, they may not be anywhere near the same for you and your situation. They're just sample numbers. Also, these change as rates of coverage change over time. And I just like the whole COVID stuff that happened a few years ago, right? Coverage costs, actually went up. Okay. So be mindful that it might go up, it might go down. Myth number two, my employer coverage is enough. All right. So employer provided life insurance is a great perk. Right. I help a lot of employers with that as well, but it's rarely enough. Right. Most group policies only cover 1 to 2 times your annual salary. I've seen some with a lot less coverage as well. Right. That's a lot of times just nowhere near what most families need to replace income, pay off a mortgage, and cover long-term expenses. Plus, if you leave your job or when you leave your job, that coverage usually ends or it gets a lot more expensive if you want to keep it. Okay, I've seen a lot of people who they're terminated, like they lose their job and just don't have coverage right away and are scrambling to get it. And, maybe they even had that job for 20, 30 years, right? Or they retire and then they're looking for insurance, but, it's a little bit up there in age and and, health issues, right? So it's a lot more expensive when they're trying to get it afterwards. So the reality, again, employer coverage is going to be best seen as supplemental, right? Should not be your sole source of life insurance protection. Relying only on your employer provided life insurance can leave you vulnerable if you change jobs, get laid off, or retire. Right? A personal policy you own is going to follow you wherever you go. The best use for employer coverage, you want to treat it as a free or low cost bonus, but always layer it with your own individual policy that's tailored to your family's needs and independent of your job. Myth number three, right? So single people don't need life insurance, right? Many singles think life insurance isn't for them, but that's not always true. If you have co-signed loans, if you want to leave something to family, or you just want loved ones you don't want loved ones to deal with your final expenses. Okay. Coverage is still going to make sense. Plus, again, when you're buying when you're young and healthy, that locks in low rates for life. I help a lot of people who are single, no spouse, no kids, with getting coverage. All right, so singles should consider coverage if they have private student loans or other debts with a cosigner. Right? You provide financial support to family members. You want to leave a legacy or a charitable gift, right? And if you see life insurance as a part of your long-term financial strategy, okay, you want to be planning ahead because maybe you're young, single, but you plan hopefully find somebody and you're gonna end up with you're gonna have kids, right? You're planning ahead and making sure you're ahead of the game there, right? It's not just gonna be for married couples with kids. Myth number four, life insurance is a bad investment, right? So life insurance is not designed to compete with your stock portfolio. It is protection at its core, right? Protection first. But certain types of life insurance, like whole life or index universal life or variable universal life, also build cash value and they offer tax advantages. It's not going to be a replacement for investing, but it is a smart complement in the right situations. So again, reiterate, the primary purpose of life insurance is to create a guaranteed payout when you pass away. But when you structure it correctly, some policies can provide living benefits like tax-deferred growth, loans, and withdrawals, and actually what's known as living benefits as well, where you have access to that death benefit while you are alive if you end up with some sort of chronic, critical, terminal illness or injury. Okay. Again, it's not made to compete with massive potential returns in the stock market or any other types of like alternative investments, but there's some great leverage use of cash value life insurance. Okay, so more on that in advanced topics later on. All right, myth number five. Okay, I'm young and healthy, so I don't need coverage yet. Okay, I've already mentioned this plenty of times. All right, this is one of the riskiest myths. Waiting often means paying more and sometimes not qualifying at all. Okay, health issues can pop up any time. And once they do, your premiums are going to go up and they're going to skyrocket, or you can actually be declined entirely. Okay, I've had 20-year-olds, right, declined. Okay, even some people's kids declined, right? Insurance isn't something you get before you need it. Benefits of getting coverage young, right? When you start young, you lock in lower premiums for decades, right? Just about your entire life for the most part. You're guaranteeing coverage regardless of future health, especially when you're getting an affordable, low cost, high coverage term policy that's also convertible. Right? You're going to give yourself more flexibility with term length and coverage options. It's one of the few financial moves where earlier is definitely going to be better. Cost of waiting, right? Waiting can cost you thousands in extra premiums over your lifetime, right? Even a 5-year delay can mean paying double for the same policy or being forced into a smaller, less affordable one due to health changes. Always plan ahead. All right, so let's recap. Myth, life insurance is too expensive. Fact, it's really often more affordable than you think. Myth, employer coverage is enough. Fact, it's usually not. Okay. Myth, singles don't need insurance. Fact, many do and should have it for future planning. Myth, it's a bad investment. Um, Fact, it's not investment, first of all, right? It's protection first with many other benefits in use cases. Myth, I can get it later. Fact, it's going to cost you, right? Waiting can cost you coverage and money. How to determine your needs? Best way to know how much coverage you need is to go ahead and look at your debts, right? Income replacement needs, and future goals, like college funding or leaving a less legacy. All right, then you want to subtract your existing assets if you don't want to count those. Okay. Or you can, not do that because maybe you want to make sure all of your assets go to your loved ones, your beneficiaries, right, without them having to cash it out, and you want to leave another layer of legacy to them with life insurance that can help cover the final expenses and everything else and all your debts, right? The gap there, right, is going to be your coverage need. Right? A licensed advisor can help you run these numbers and compare options. In conclusion, life insurance is primarily about protection, ensuring that no matter what happens, your loved ones have the financial resources to keep on going. Right? Don't let myths keep you from making a decision that could protect your family's future. All right, guys, thanks for watching. If this cleared up some confusion for you, share with someone else who might have these same myths holding them back. If you want help running the numbers or finding the right policy, I'm here to help. All right, here's how you can reach me. Whether you need a quick coverage check, a second opinion, or a full financial strategy session, I'd love to connect and help you protect what matters most.